Hello friends. Good evening everyone. Welcome to Super 25, India's largest retail traders online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul and also the host for today's program. It's a great pleasure to invite every one of you to Super 25 edition 3.0. I'm sure by the end of this program you will have a respectable knowledge in terms of day trading using market profile. I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website. I would also like to thank and appreciate our title sponsor Espresso from the family of 𝐍𝐚𝐭𝐴n, one of the leading stockbrokers in India with millions of investors as their customer. The speaker for today is Mr. Nataraj Malwade from Bangalore. He will empower us today with his special topic, day trading using market profile. Nataraj is a rule-based intraday and swing trader. He is also a passionate trainer trying to help budding traders to find their edge. He has trained little over 500 traders through various online and classroom programs. He has been actively investing and trading in the market since 2013. That's close to about 10 years now. His primary focus areas includes price action, market profile, and option delta neutral concepts. He has also published a book called The Mastermind of Day Trading, which predominantly talks about success in day trading by adopting rule-based techniques of market profile, price action, and money management. My friend Nataraj, on behalf of Traders Gurukul, Money Control Pro, Espresso, the 𝐍𝐚𝐭𝐴n company, I extend my warm welcome to you into this program as an elite speaker. Go ahead, my friend. The stage is yours.
Thank you. Thank you so much, Ashok sir. First of all, I would like to extend my heartfelt gratitude to the sponsors of this program, Money Control and Espresso, and of course, Ashok sir and Fazil sir for giving this wonderful opportunity. And most importantly, the people who are watching this webinar. So, especially after COVID-19, many people have started to enter into the markets without, even understanding the fundamentals of the markets. But without understanding the basic rule of any particular business or any particular event is most of the gravest mistake we can ever do. So in that particular perspective, I would like to congratulate all of you who are attending this particular session and taking a step towards learning something new and educating yourself, which is a greatest step. So without any further delay, let's straight away get into the subject. I think already Ashok sir has given a brief introduction about myself, but so basically the journey has started in the 2013. So basically from the 2013, and I'm really happy to say that from the beginning, I started investing in a mutual funds and ETFs, and also the specific stocks which orients towards certain themes. So from the day one, I've been into, like, when it comes to the investing, so I've been profitable. But when it comes to trading, the story is completely different, So I got introduced to the trading by one of my friend. So that is where the overall story started. And initially, I used to focus on the positional and swing trading strategies, especially when I was in a job. So I used to concentrate on crude oil and USD/INR. So the price action was the, like, mesmerizing thing for me. And the day I got introduced to the trading, I got really fascinated about it because I used to get margin and all. So I straight away opened my Excel sheet and draw the numbers, right? So like typical every beginner does in the market, so I straight away targeted $1 million in the next 2 years. But unfortunately, which didn't happen, because that's how the trading works. The reality of the trading is something else that we see on the social platforms. So today, especially after a lot of hiccups, so I got introduced to the book called Trading in the Zone. So it is not a promotion, but it is a book which is like a Bible to trader, right? So it covers most of the psychological aspects of a trader, and that is where the overall table started to turn. And I got an approach, or I got some ideas how a trader should think. So that is where the real journey started, and I started mechanically defining my strategies. So market profile is one such concept, so which is also I'm going to discuss today. So the exact concept that I'm going to discuss is basically like any particular concept that we take, right? So any particular concept, so which should be, when we see the information, it should be like objectively we should see that information. So that is the main learning that I got from Trading in the Zone book. So as of today, I run 4 intraday systems which are completely end-to-end automated, so I don't manually interrupt it. So the core behind those strategies is basically the market profile concept. So that is exactly what I'm going to share in this today's session, and this is I'll definitely put all my effort to convey the best knowledge possible for today's session. So I expect you to be till the end to get the complete clarity, and most importantly at the end of the session I'm going to take questions. So the maximum questions which is possible in this session I'm going to take, and I'm going to answer in the last section, right? So let's move on to the next slide.
So the title sponsor of this lovely program is Espresso, the 𝐍𝐚𝐭𝐚 company. Thanks to the leadership team of Espresso for believing in Traders Gurukul ability to deliver some of these greatest events to the wider audience and the retail community. Thank you. Over to you, Nataraj.
Cool. So just a moment. So first question is, right, so the moment I say anything, okay, so not necessarily market profile, anything in the market, the moment I say any particular name, so automatically we link that to either an indicator or either an trading system which gives a buy and sell system or buy sell signals. But market profile is not so. You might be wondering then what to do with a market profile, right? So market profile is a concept which tells the story and the context of the market. So basically context in the sense how the overall market is behaving, how the market structure is evolving, how the overall buyers and seller are responding to the individual reactions of a buyer and seller at the same time. So it tells the story of what happening behind the market. So that is what the specialty of the market profile is. It is not an indicator, it is not like a trading system which gives a buy and sell signal. It is a tool which we can use to understand the context of the market. So this is one of the important thing in this particular case. Just a moment. So we will straight away going to understand the market profile key concepts. First of all, I would like to give this disclaimer: market profile in itself is a huge concept. It's a vast concept, but in that the things that matter to me, so I took those few concepts and I'm going to explain you in the beginning part. So this is going to be the theoretical part, and after that we will be looking into the charts, and also we'll be looking into the concept, how it has worked and what is the statistics behind it, because whatever I'm going to discuss today is backed up by the statistics. That means it is tested over for last 10 years. So that is the beauty of this concept. So in the first step, right, so in terms of the overall concept, we need to understand the 2ST. The evolution of the market profile started from 2 standard deviation, which we have studied in our SSLC, right? So 2 standard deviation is the core principle of entire market profile concept. What it means is this basically, just a moment. So if you can observe this chart, right, so you can see this particular area, right, this 68% of the area. What it means is that when you collect a large collective data, it may be one particular specific data but with a large number of data, let's say height of some people or weight of some people or weight of some nation, whatever it is. But when you have a large set of number of data for a specific data point, so that data will fall under this 68%, right? So 68%, this we can call it as a first standard deviation. And so this is the 2 standard deviation where 13.5% of the data falls in. So and 2.15% falls above 3ST. So this is where the concept of market profile has evolved. So basically the founder of or the one who identified this opportunity, so basically what he suggested, follow my cursor. So let's say if I can put like this, right? So assume that market has traded all these areas, right? So all these areas market have traded, but when you put across all the data into one particular vertical line, so the entire data which is traded for the entire day, the 68, so we can call it a 70 also, but 68% of the data or the market spent 68% of the time in one particular area. That particular area he calls it as value area, right? So when the importance of this particular data or the particular data point is that whenever market goes beyond the value or beyond, sorry, just a moment, sorry guys. So Just a moment. So when market falls or market goes beyond this particular area, then we can call it as an imbalance of the market. And typically most of the conditions, as you can also observe, that in the market when it goes beyond the value, again it tries to fall within the value because it is out of the value. So most of the time market falls within this data, we can call it as a value area, right? So this is the principle which has given the birth to the market profile concept. And so now we are going to concentrate on the market profile key concepts. As I said, there are so many concepts involved in the market profile, but in that I'm particularly going to concentrate on the things that has worked and working for me, right? So in that, the first concept which we need to understand today is an IB range. What is IB range, right? So IB in the sense initial balance range, as the name implies, initial balance. So whenever market opens, right? So I think you guys also have observed, when market opens, it creates certain range, but before that, when market opens, there will be a huge volatility, right? So market will be volatile in the initial range of the market, but after certain period of a time, market starts to stabilize its action and the volatility as well, and after that it forms a certain range. It may be 5 minute, it may be 10 minute, it may be any particular time, but when market subsides its volatility, it forms a range, the initial range of the market. So this we can call it as IB range. But so typically most of the market profile traders, or the one who considers to trade a market profile, they consider the first 1 hour range, first 1 hour range as the IB range. So that means, let's say if the market opened here and after 1 hour, that means considering our market timing, so it is at 10:15. If you consider the look at the market at 10:15 a.m., so it will be forming basically the first 1 hour range, right? So it will be forming certain range in the first 1 hour, and that particular range we can call it as IB range, right? So this is an IB range. And what is the importance of it? This is where the most important question comes in. As I said, every information that we gather from any particular book or any particular video or any particular person, so there has to be some concept that has to be backed up by the data point, because that is the whole objective of what we are going to discuss today. So basically objectifying the things, right? So when it comes to the importance of IB range, I would like to tell you the stats of it. So this stat is a wonderful stats which tells the importance of IB range. So this entire data I collected it from last 10 years, considering Nifty and Bank Nifty both. Out of that, you can see total days, right? So let me mark it. Sorry guys, sorry. Let me mark it. So you can see Nifty and Bank Nifty and total days. That means for how many days we have tested this. So in that particular case, for Nifty, it is 3066 days and 3090 days, approximately 10 years set of data for individual day. That's the importance of IB range stat tested here. The importance comes here is that day low. That means, let's say after 1 hour completion, right? So let's say 1 hour completed. This is the first hour. And after 1 hour of completion, if you just look into the end of the day, if you just look at the end of that particular day, the high or the low of the entire day formed within the first 1 hour range. This is the critical information. That is what the tested data suggests. So basically day low formed 935 days, day low formed in the first 1 hour, and the day high, that means the high which is formed in the first 1 hour became the high for the entire day. Market traded below this particular level, hasn't crossed this level. So which gives us a very critical information, and which also shows the importance of IB range. So in that particular case, the day low formed in Nifty was around 935 days out of 3066 days, and the day high which is formed in the first 1 hour was 1032. If you can calculate the overall data, the data approximates to 64% of the time. So the day low and the day high formed in the first 1 hour in the Nifty. But when in Bank Nifty, which is much more volatile than Nifty, has resulted in 70%. You can see this is the stat, and the importance of IB range, especially it works magically for the instruments which has more volatility. So in our case, it's a Bank Nifty which is more volatile. So 70% of the time, the day low and the day high, total out of 3090 days, 70% of the time, the day high and day low formed within the first 1 hour range. So this is the critical information, and based on that, many strategies can be formed. So we'll try to understand those particular things in the next slides. So I just want to tell you this one, like if you have any particular questions on the data sets, or if you have any particular questions on the concepts, please take a note of it. I'll be taking all the questions in the end of the section, right? So let's move on to the next thing and understand. So this is basically about the IB range and the importance of IB range. So now let's move on to the next important concept of market profile, which are basically day structure. What day structure is all about? So if you see the market as